Hi, everybody. Good evening. Good evening. Ooh, yeah, that's fun too. All right. Good evening, ladies and gentlemen. Good evening, boys and girls. Everybody who is online as we get set up here this evening. Hello, all you YouTube livers, everybody who is online. Okay. And we're all good to go. I think we are all good to go. I see the questions box is already filling up here, folks. All right. Good evening. Good evening. Let's see who do we have on here. A lot of people are online. Let me just make sure. Okay, it looks like we're going solo here today. Not a problem. We gave Aaron the night off because he was actually working pretty hard. So last little while. So not a problem. All right, and there's something I need to do here. Hang on just one second. I need to cut off the okay, this is what I got to do. Okay, got it. So I don't get any feedback. All right. Okay. Let's get started, folks. Here we go. And good evening again. Welcome to DayTradeSPY.com's weekly fireside chat. This is our introduction to trading weekend review session. My name is Hugh, and good to have you all here this evening. And it is Sunday, March the 24th, 2024. Please use the questions box. Find the little questions box icon on your Zoom dashboard. Click on that. I am the only one that sees that, so go ahead and say whatever you want. All right. And while I'm going to do that, I'm going to also just give you a little bit of an introduction here and give you a question. First off, what is your options trading experience? Just punch in the questions box. One, if you're very experienced. Two, if you're somewhat familiar with options. Three, if you're new to options. And four, what are options? You don't know what they are? Punch in number four. All right. So while we're waiting for that, I just want to tell you a little bit about some housekeeping here and whatever. Sometimes I do speak a little bit too fast. If that's the case, please tell me to slow down in the questions box. Use the questions box. You'll find that little icon on your Zoom dashboard, as I mentioned. And I'll certainly, slow things down a little bit or whatever. I get very passionate about this, and obviously there's a lot of information I want to give you, and a lot of things I want to talk about. So I get very excited. And the funny thing is, I've been doing this now for about 14 years. I'm just as excited today as I ever was, probably more so. And it's very obvious that I'm excited about options, right? Anyway, that's one thing. The other thing I want to tell you about, if you are new to options and you don't know anything about what we're talking about as far as the technicals are concerned, don't worry about it. You're not going to miss too much. If we do, dumb it down a little bit for some new people, please, for lack of a better word, for those experienced, please bear with us on that. I want to kind of make sure that we don't leave anybody behind. All right. And again, so if you don't understand something we're talking about, again, don't worry, you're not really missing a lot. And once you join us with our various programs, it will not take you long to to get with the program, right? So. All right. What else I wanted to tell you? Oh, yes, yes. If there are a lot of people who are new to options, don't know what options are, we'll have a segment after our regular segment and just kind of give you a brief primer on what options are. Okay. So for that, I'm going to just go back to the questions box and see where everybody sits. Yes, the bar is open later tonight, Doug. And we got the dancing girls. All right. Hope you're back 100%. I think I am. As a fireside chat next Thursday, or yes, it'll be next Thursday. I'll give you more information on that. A lot of ones and twos. All right, ones and twos. What happened to Aaron? Aaron, I think he's on a vacation. I think he actually took his family to New York City, and also they're heading up to Salem, Massachusetts. Uh, hmm, Pardon me while I drink my hot tea here, hot peppermint tea. So yeah, he's checking out the his ancestors. He comes from some witches alien. He's got some witch in his blood. So I don't know. He's going to go back and check his lineage there with Salem, the witches. Anyway, he's doing that this week. So we're going to be doing a lot of stuff on our own here. All right, lots of ones. I don't see a lot of fours. No fours. Okay, if we don't have any fours, we're gonna skip over the oh, that'll be good. We're gonna see, oh, there's a new one, Eric. Okay, all right, we'll probably do that. There's a couple more fours. Okay. All right. Threes, fours. Aaron. Okay. All right, there's another four. All right, we can do the fours. We can do some fours, not a problem. Okay. All right, let's move on. Got to keep the lawyers happy, folks. So I'm going to have to just read this disclaimer. By attending this webinar, you fully understand and accept the financial risks involved in trading securities. The risk of loss can be substantial. You should carefully consider whether such trading is suitable for you in light of your personal investment objectives and financial resources. By accessing this webinar, you understand that you're not receiving any advice as to what or when to buy or sell, but are simply receiving information for educational purposes only. Any decisions concerning your trade are solely your own to meet your personal objectives and risk tolerances. You alone responsible for all your trading, and past performance does not guarantee future results. Charge courtesy of Schwab, Thinkorswim, and Tasty Trade. Excuse me while I just clear my throat. I've been talking all day here. So, all right. Well, there I am, full living color. You can see in the background there the sun's setting here in this beautiful beach house that I'm at right now, and I love it out here. Even when it's cold and nasty and snowy, it's very nice out here at the beach. I don't know why, but it must be maybe I have some water in me. You know, I am a Aquarius, and so maybe that's got something to do with it. I'm attracted to water. Anyway, good to have you here, folks. So my name is Hugh. I'll give you a little bit of a background about myself. There's Aaron, and my trading experience, because I know you're asking, especially the new people, why listen to Hugh? Who are you, Hugh? You don't come from the trading floor. No, I don't. Although I did spend a couple hours at the Chicago Board of Exchange, I guess once up in the gallery, checking things out and seeing how things work over there. But no, I was not a runner. I didn't bring the coffee for the traders. I did not trade, nothing like that. And although I've been to some courses where they did present some of these guys from the trading floor, and I don't really know whether they knew a whole lot more than I did, to be honest with you, because if I followed them, I would always lose money. I don't know why, but that's another story. But where I got my experiences from the trenches, and I was forced into this. I say that quite. Nobody twisted my arm or anything, but it was going to be either that or I was going to be on. Um, well, let's put it this way. I used to work for corporate America, and like the good salaried employee, I'd hand off to my financial advisor a lot of my paycheck, thinking that he's going to, invest in my future and retirement's going to be great, and kids are all going to go to the best schools and all this other wonderful stuff. And by the time I realized that this was not going to be, he'd blown out about half my account, and I had a lot of money in there, and I was quite perturbed about what was going on here. I was not happy, obviously, and I essentially said to him, "Okay, just cut me a check for whatever is left. Obviously, I have to figure out how to do this myself." I was quite comfortable with numbers, and so I was okay with risk. I figured that now with the internet, um, I can learn how to do this myself, right? I've got information just as much as anybody else, literally at our fingertips right here. And so do you. All right, so do you. So I set out to learn how to do this myself. Took a lot of different courses and different things, and mostly what I learned from those courses. I mean, I've learned some things. I'm not going to kid you, but mostly what I learned was things what not to do. And there's a lot of things that they don't teach you. They didn't, at least they didn't teach me. And I took a lot of courses. And I really wondered why some of these things they don't teach you. Well, probably because they didn't know themselves. And a lot of these instructors, in fact, every single instructor, when I would be at the in these classes, I'd ask them, I said, "So, Mr. Presenter, you trade this yourself?" And not a single one said that they trade themselves. They all said they're just a presenter. And what were the other comments? Oh, it's too high risk for me. It's too risky for me. I don't have the capital. All these wonderful things they would say. So they're telling me what I should do with my hard-earned money, my retirement savings, but they don't have the confidence to trade it themselves. Like I'm going to listen to you then, really, pal? Fold up my books. I'm out of here. Anyway, that's what I did. But I knew there was money in this business. I knew deep in my heart there's a lot of money in trading options, or at least trading stocks. I started out trading equities. And of course, I looked at other things. People would say, "Oh, futures, oh, forex, oh, commodities for this," and I, did the circuit. Back then, I don't think we had something. I don't think we had crypto. I didn't do anything with crypto. All I know about crypto is to stay away from it. But we didn't have, what's the other one? Non-fungible assets or something. Never touched any of that stuff. But I kept coming back to this thing called options and options on SPY. I found myself at the end of the line with SPY options. SPY, the stock that follows the S&P 500. And up until then, I'd be in various trading groups and different things. And oh my gosh, we'd be in we would be in meetings every Sunday night, all day, Monday through Friday, 9 to 4. And then I think Tuesdays and Thursdays and the night, get together at 7, end up at 11 or something, and we'd analyze different companies and sectors and this and that. And I don't even know what we're looking for. I don't even know what we're looking for. But and how can you tell where the market's going to go? I mean, the market's the market, right? But eventually, when I discovered SPY, which just simply tracks the top 500 stocks, all the sectors, everything is right there. Things got so much easier for me, and I could figure this out pretty good. And then I started making some pretty good money to the point where I changed my lifestyle. I'd have a lot of vacations, bought a new cars, and maybe I shouldn't even tell you this, but I've got a son and a daughter. That time, I think they're both in college at the time, and things weren't always great for me. I'm going to tell you that right now. But I remember, I mean, they'd always be, using my car and stuff. And I said, listen, I got to get you guys some cars. You got to get some cars. And maybe it was not really the good thing to do, but uh, I shouldn't tell you. But and I might even have a picture here somewhere. I'll show you one day. But I bought them both pre-owned Mercedes, just the C class. Baby Benz they call them, whatever it was, a 230s or 240s or I don't know, something 250s or something. A couple years old. One was a really nice silver, and the other one was black. And I had them right in the driveway there, one by one. I said, guys, we did pretty good on the stock market, so here's some cars for you, okay? Now you don't have to bug me about cars. Alexis, here's yours. Alex, here's yours. Here's your keys. I cannot tell you how they jumped up and down when he said this to them. And but anyway, that's not. I'm not here to brag about it. But I'm just saying things got pretty good, and then people started taking notice. Especially when I bought my airplane. So okay, Hugh, well you won a lottery or something. No, I'm just trading SPY options. Well, can you show me how? And then I would say yeah, sure. And they wanted me to start up a website. And I remember that early website. I'm just kind of reminiscing here. It was a crazy, crazy website. It was just something I picked up somewhere. I think it was on Yahoo Finance or something. It had these little spotlights coming down on the stage with the curtain open. Very, very basic. It's just what I was looking to trade that day at the market open. And then what I would do is I would follow up later in the day with what I actually did. And then we used to get together at that time, it was every Thursday night for an hour, and just discuss the week's activities. And that's what started with the inner circle. And then what happened was we expanded and some training, and we did some ebooks and videos and one-on-ones, and eventually a trading room. And anyway, long story short, fast forward 13 years, we were bought out by Eagle Financial Products, a division of Salem Media Group, and they brought on Aaron. And Aaron he's the real deal as well. He opened his first trading account at the age of 17. So he'd be down in the library in his high school studying charts and that sort of thing, and Fibonacci retracements, and Andrew's pitchfork, and some of these really crazy indicators and stuff. And he became very good at this, a very good technical analyst. He ended up, we call it his deep dive analysis. And then he became a technical analyst for a $150 million commodity fund. So he would predict where the market's going, and the traders would trade this, and they made a lot of money. So he'd identify these high probability trades. So we brought Aaron into the mix. Excuse me. So now in the trading room, we have myself with my set of indicators that I use that are very successful as a rule, and all of the things that go around that. And by that, I don't mean just technicals. I'm talking about bringing in the fundamentals and the psychology of trading and emotional control, all that wonderful stuff. And then we've got Aaron with his completely independent set of indicators as well, and his very successful indicators. So here's where the synergy comes in. This is where 1 + 1 = 3. Because when our indicators unite, our trades ignite. It's actually unbelievable, uncanny how this works. And that is why we are so successful with what we do. Are all our trades successful? No, there are some losers. And I'm going to tell you some stuff here later on tonight that's going to knock your socks off. And I've got some things I'm going to be telling you tonight that you really need to pay attention to. All right. It's concerning our trading room. And I happen to know that our bosses are not listening tonight because it's a Sunday night. And that's really kind of important. And I know they don't listen to the recording, or if they do, it's too late. So that's one of the reasons I like to do the Sunday night. I've got a lot of leeway that I can actually, say things. And sometimes and if I say something that I shouldn't, then they'll just, rap my knuckles or something. But it's always easier to ask for forgiveness than permission, right? Is that the same? Anyway, I got some really good things for you, but you need to listen up when I tell you this. Anyway, let's move on. Next week's some announcements here. Okay, some announcements. All right, three announcements. First of all, next week's Intro to Trading Weekend Review is going to be actually on Thursday, March the 28th at 8 p.m. The reason is because the stock market is actually going to be closed on Good Friday, which is next Friday, obviously. So we're going to have this Sunday night instead of doing it on Easter Sunday. We're going to move this up a couple of days to Thursday, 8 o'clock Eastern. All right. So write that in your calendar. You don't want to miss it. Next announcement is this Spy on the Market. Heard us talking about this before. This is our free e-newsletter. It is published every Thursday morning. By the time you wake up, head over to your computer. It'll be in your inbox. Okay. It's a very brief 3-minute read, light, relevant, whatever. It's even entertaining. Okay. All you have to do is subscribe, folks, is go to DayTradeSPY.com. And over there on the right side, there'll be a couple of videos or something. You just got to leave your name and number and your address. And then just, you'll get you on the mailing list and you'll be able to get this email newsletter. If you do miss it, you can actually go on to the website, which is DayTradeSPY. I believe they have them posted there. Let me see right here, the newsletters. Where did I go? DayTradeSPY. I thought I saw it here. Maybe. Yeah, that's so okay. It's right here. Yeah. Okay. So they do post the newsletters here. So yeah, just click on here to play the videos or get this daily payout plan. Get one of these publications. Leave your name. That'll get you on the email list. It'll get you right in there. I think a day or two later, they will actually post them on the website, and you'll see all the articles down here. I think right now we've got about, I don't know, 27 of them or something like that. So they're actually pretty good. Just click on the links, and there they are. It's just a brief 3-minute read. Very, very informative. It's nothing too heavy. You can read in about, like I said, about 3 minutes, and then you are done. My next announcement that I have right now is this. I'm going to just ask you to hold on for about 20 seconds until I turn the heat down because it's actually boiling in here. So I'll be right back, folks. Okay, thanks for your patience on that. I don't even know if it was 20 seconds, but all right. So, by the way, this week's topic is never waste a good loss. We're going to talk about about that in a little bit. What are we going to talk about here tonight, folks? Let's take a look here. All right. Review of last week, preview of next week. We're going to talk about our 2 to 10K challenge update. Special. Okay. No, we do not have this slot. Okay. This is not supposed to be in there. Let me get rid of that. There we go. Okay. All right, there we go. The 2 to 10K challenge update. We have a 2-minute tutorial for you, some questions and answers, and then we'll get into our options primer for those people who are brand new to options trading. All right, so we're going to just move this over, maybe center this a little bit. There you go. It's my OCD. There we go. That's a little bit better. That's what we're doing tonight. All right. So let's take a look at last week, what happened here. We're going to quickly go over this because it's not so much important what happened, in the past. as much as what's coming up and what we're going to be doing and all that wonderful stuff. On Monday, it was a low, no news day. Technicals tested 515, closed a little bit lower than the open, ran up, came back down. Nothing great, crazy there. On Tuesday, we had some higher than expected inflationary numbers. We had building permits, housing starts, retrace, SPY, and pre-market. And of course, buyers were anticipating a positive Fed Reserve announcement, which was coming up the next day. So there was a lot of talk about keeping interest rates steady, right? Maybe even lowering them if they're thinking of that. But they're certainly not going to be raising them. That was sort of the premise. And then, excuse me, on Wednesday, we had fairly range-bound trading until the Fed announcement, which was at 2 o'clock. And at that point, SPY rocketed much, much higher, broke all kinds of resistance levels, up to the point where on Thursday we actually hit a record high at 524.11. Also, based on some news that was bouncing around pretty good there, we had unemployment claims, manufacturing PMI report, services PMI report, existing home sales, Philly Fed Manufacturing Index. All of this, they throw all of these news items into a blender and then comes out with what happened. All right. So push SPY at an all-time high, settled just over 522 by the end of the day. And then by Friday, we had a little bit of retracement, a little profit taking, right? And Fed Chair Powell's comments about what's going on and different things created a lot of volatility. Settled in just over 521 at the close. Basically, kind of a nice move to the upside here overall on the day. And there's certainly money to have been made during the week here. So looking at a seasonal chart, I'm kind of going through this a little bit quickly here. From a seasonal standpoint, so what happened here was, and for those who are not familiar with this is a seasonal chart. So the blue line is where SPY is now, and the red line is the composite of the last 5 years closing balance on the daily chart. Okay, so when you squeeze this together and blow it up and focus in, historically, SPY gained about 2 points over the last week. Although you might not look like it here, but if you look at the lines, let me see if I can just draw here. Insert because this is what we're looking at here, right? Insert a line like this. So we'd be looking at, I think, started from about here and up to, where do we close here on the 22nd? Something like this is the way it worked out. But there's about a $2 increase in there. Just give this a little more weight to show you there, something like that. Okay, so we gained about 2 points over the last week. Now, seasonally, okay, if we look at seasonal, then we're gonna be looking here. If I just let me see if I copy and paste. Can I paste this here? Maybe this will work. Okay, so if I look at the seasonals from tomorrow to um, the end of the week, we gained about 7 points the following week. So we're looking at an uptrend from a seasonal standpoint. And that's kind of good to know from a fundamentals basis. I mean, it's a technical indicator, but fundamentally, if the stock is going to perform the way it did in the past, we could see this thing going back up. Of course, there are never any guarantees. And there's no guarantee on anything, right? You know that, right? Anyway, what happened last week? Well, the Feds held rates steady at 5.25 to 5.5%. The updated dot plot says still that they're going to looking at having 3 cuts this year, and probably May or June. Not really sure when the next first cut's going to happen, but they're still looking at 3 cuts this year. Rates gradually heading down to 3.1% by 2026. They're still trying to get inflation down to 2%. And heading into next week, SPY remained uncertain into the week if the Feds would maintain their outlook, especially considering that the early part of this year was somewhat hotter than expected inflation. And frankly, I'm a little surprised too. I thought that they'd be a little bit more hawkish and trying to keep rates. Maybe I thought that maybe they might even raise it a quarter point just to get this thing down, because that last little bit, that last percentage point, the last mile is always the hardest. It's always the hardest. And it's like running a marathon, right? You can run 24 miles or 23 miles, but that last little bit, man, that is the toughest mile to run, right? And that's what this is like. But I was a little surprised. I shouldn't say so. I thought it was going to be the same, but it wouldn't have surprised me. Let's put it that way. If they did raise it just briefly, just to knock it down, but they did not. They did not do that. Markets did hit record highs, welcoming the dovish messages from Fed Chair Powell, and also, and I think this may have had an influence on Powell's decisions as well. That a large majority of central banks around the world are on a similar path. European Central Bank, Bank of Canada, Bank of England, Swiss National Bank, they all look to cut rates. Only the Bank of Japan actually raised their rates a little bit in the first time in 17 years. Now they were already in the negative. They went from negative 0.1% up to to 0%, 0.0%. So a bit of an exception there, but all the other banks around the world are looking at doing the same, same sort of thing. So, okay, well that's fine, right? And that was kind of in line with and in line with that whole soft landing. We didn't suffer a major recession like they thought we were going to, and things like looks like they're getting back on track. Here's what happened S&P last week and year to date. Certainly, getting into some pretty good numbers here. Let me just bring this up here. I like to see things centered, and not really sure how that got moved up a little bit. There we go. S&P this week ran up 2.3%, almost 10%, 9.7% year to date. And here we are pushing the end of March. I mean, if this keeps up, what are we going to be at? 30% or something? 25, 30% for the year? I mean, that's astounding, right? Same with the NASDAQ. 2.9% this year, 9.4 for the year to date. Dow's up 4.7% year to date. So that's looking pretty good. So what's coming up next week? That is the big question, right? Well, Monday, new home sales. Tuesday, durable goods orders, conference board, consumer confidence, Richmond Manufacturing Index. These are all medium to high impact news items that are probably going to be influencing the market. On Wednesday, nothing other than crude oil inventories. All right. Now, normally, if there's other major news, oil inventories is not going to affect prices. But if that is the only thing that's on the schedule, then that might have a little bit of an influence on markets. Thursday is going to be a big news day. We've got unemployment claims, um, gross domestic product report, Chicago PMI, pending home sales, University of Michigan consumer sentiment, and also inflation expectations. Big day on Thursday. Friday, personal consumption expenditures, PCE, which is actually another major inflationary indicator. And Fed Chair Powell will be speaking on Friday as well. Just want to check to see what he's going to be speaking on, what he's going to be doing. I'm not sure if that is going to be a major item or not. I want to check to see. Just because he's speaking doesn't necessarily mean the markets are going to move. He is scheduled to speak at 11:30, due to participate in a moderated discussion with Kai Rysdale at the Macroeconomics and Monetary Policy Conference in San Francisco. So his comments could influence markets. Okay, so here's what I'm expecting as far as volatility. Probably low on Monday, a little bit higher on Tuesday, low on Wednesday. Thursday, markets are going to be higher. Friday, doesn't matter. Markets are closed because Good Friday. So Fed Chair Powell's speech on Friday, it's not going to matter. But watch for elevated volatility on Tuesday and Thursday. That generally means that we're going to, we're going to have opportunities to make some money, right? And that's kind of the idea. So, all right. So let's take a look here. What's happening here, folks? Every day the market gives us opportunities to make money. Every day there's a number of opportunities. We can make some pretty good money trading stock options. We show you how to spot them and also how to trade them. Now let's take a look at a very painful day, a very painful week, 2 to 10K challenge. Let's zero in on this here. All right, we're going to zero in on this. Wednesday, March the 19th. No, Tuesday. It was Tuesday, March the 19th. Suffered a loss. Suffered a loss. $2,520 loss. Uh, ran back up here on a nice Wednesday and got a little aggressive again on Thursday. And that was another loss. Don't think I traded on the Friday. There's something that wasn't traded on the Friday. Maybe that was on the Friday. I can't remember now. But so what we're going to do here is so we brought that. So we came back down here. Let me just draw this thing here for you. Okay, here we go. So right now, where we sit, our balance is 2313, still over the 2000 we started with. Um, but we had these losses. These are major losses, and I'll go over the details. But this is the one here that really kind of hurt. I also put these things in here. I'm gonna draw a circle. So when I have a bad day, I kind of put this pink block in here, and I don't have. Let me see. Let me go back here a step here. And when I have a really good day, I put a green, like a really good day. And these are exceptional days. And this is a good thing I've started to come up with on this spreadsheet because this way you can look to see, all right, what you're trending like and where the pressure points are. So I found that usually when you have a major loss, it's not a single error that causes that for the most part. It's usually there's a series of things that happen. All right, a series of things that happen that make things go bad real fast, real quick, right? Real deep. And so I look at these charts and I look and see where, okay, let's see, we had a bit of a negative there. I mean, I lost a little bit at that. That should have been in red actually at 160. Not a big deal here. And then I had another loss over here, which we discussed the other day. But these two guys here are kind of they're tough to take. So now what I do, all right, and I have been doing this for a very long time. This is where I actually got good at trading. I analyze my mistakes or my losses, I shouldn't say, not necessarily mistakes. There are many reasons why you can lose. Maybe a human error, maybe there's some technological issue, like your options did not execute because your broker might have diverted your trade to the trading desk for review. I can assure you that with Thinkorswim and Tasty Trade, that does not happen. But I know of some programs, some brokers that they do that, and you want to get rid of them. If you find out your broker sometimes will divert your trade to the trade desk for review, dump the broker because they can actually just front run your orders, take advantage of your trades, and they keep the profit. They leave you holding the bag. All right, punch it up what front running means. There's also there are different reasons, why maybe there's something with again maybe just a slow execution. Maybe it was just that outlier bad trade that went wrong. Not even your fault necessarily. You read everything right, but something quirky happened. Maybe there's some news item that's just all of a sudden shot out of nowhere that changed the direction of everything. So, but I do like to go through and determine what went so wrong. So in this case here, this is what I did. What went wrong? Number one, and I looked at this thing and said, you know what? I'm going to go back and look at this. I was medicated, fighting symptoms of an illness. I'm still not 100% out of the woods, but I'm almost there. Okay, folks, never trade. All right, when you are medicated or if you've been drinking. That doesn't apply to me, but really, if you don't realize it. Like if I had, I don't know what I had, Tylenol, Advil, Sudafed. I don't know what, I don't even remember what I had. Prescription medications or whatever. But what happens, it can cloud your judgment. It could cloud your reaction time. It could just, it could just cloud your total, it could you're not thinking straight. You're just simply not thinking clearly and straight, and it could instill fear when you shouldn't be afraid. Maybe it'll get you a little more aggressive when you shouldn't be aggressive. I don't know. But you're not yourself when you do that. All right. I was actually fighting some kind of symptoms of an illness I had. It's been kind of lingering for the last couple of weeks. Actually, when we were in Florida here several weeks ago, we had it really bad. We're sick in bed. We think we might have COVID, but I didn't want to check. I didn't want to know. But anyway, that's what we did, and that was probably my big thing there. But with that, these other errors also, presented themselves. So on that day, that Tuesday, actually, I had decided before that calls was going to be the way to go. And you know what? I was more than spot on with those calls. And some people got into calls and they did very, very well. And congratulations to those who did, if you're online here. Uh, but then, but my calls did not get filled. In fact, the market reversed itself on the short term, and that's when I just flipped and went with puts. And then we had a bit of a controversy on that. Well, wait a second, Hugh. You didn't get filled. You went, change your mind and this and that. And I got into calls. I said, okay, look at if you got into calls, don't worry about it. You're gonna do fine. And if you look at back at Tuesday, you'll see that the market actually shot up very nicely in the afternoon. And I know some people like did really, 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 really well with that. So, but here's my initial decision was spot on calls, but I hastily, all right, changed my direction without proper assessment. In the short term, it was actually a bit of a retracement rather than a change in the direction. And I took that as a change in direction. It's going to go down. And I just flipped and I went with puts instead of calls. I got in right away. I didn't even, so it was a very hasty decision. Not a good way of doing it. Okay. And my experience, and here's the irony. My experience with puts is actually not that great. I mean, I do make money, and overall, I've made money and all that, but I'm much better with calls than I am with puts. So, and knowing that, and that, in fact, that's even one of the rules I have. I believe that's even one of the rules where I'm looking at calls. Maybe it's one of the rules, maybe not, but I know that that's sort of my policy is to go with calls. Why would I go with puts? Obviously, I was, not myself. Stay with calls. Stay with calls. Number four, being called away with meetings. I had a medical appointment, doctor's appointment. I was not able to watch the markets, and yet I had here, I had actually an option that was a same day expiration with puts, and I left it. I just left it open, walked away. And one of my cardinal rules on same day expiring options, you don't go away from those. You can't leave those because you're going to have a theta situation you got to deal with. You may want to move your stops higher if it's going your direction so you can really take advantage of a move, right? If you're going to go with the risk of a same day trade, why wouldn't you take advantage of a really good move in your direction? Like that was just not a prudent thing to do, you know. Um, but that's what I did, and I regretted that. Number five, all right, I took on a higher risk, knowing that the Fed announcement was coming in the afternoon, something that I don't normally do. Normally, I like to be out of my trades when there is a Fed announcement coming, because that just turns your trade into nothing more than a gamble. You might as well go to a casino. Play the reds or the blacks or whatever. That's all it turns into. So even if those puts would have worked out, it would not have been a good trade. That would have been a lucky trade. And I do not like to play the lucky card, if you know what I'm saying. Number six, I entered the puts ahead of the setup. I was not even patient with that one. It was an immediate just a retracement, and suddenly I just got spooked out, scared out, went the other way without even the proper setup was not there yet. And number seven, and in this case here, I failed to listen to Aaron. He was online, and he actually talked about about a hard support, and I failed to listen to him and pay attention to what he was saying. So when I was saying that, usually when you have a loss, it's not really just one thing. It's usually a series bad decision making or something, series of things that went wrong. So here are the 7 things that went wrong. What I didn't put on this PowerPoint is this one here. What also happened when I lost a couple days later, lost another 675. Excuse me. I tried to get ahead of the game again with a very aggressive trade on the same day expirations, and it just did not happen. So therefore, I ended up losing on that one. But anyway, what I'm going to do here is obviously go back to the drawing board, and I do have some changes we're going to be making to this. So here are the rules. Start with $2,000. Trade only profits as they settle the next day. Use a cash account, so your pattern day trade rules do not apply. Buy first, then sell. Calls and puts using our standard setups. And it's good to remind myself, right? Good to remind other people and everything else. And we track it on the spreadsheet. Results are always reported in the inner circle follow-up report. If you're not part of the inner circle, you want to see what these results are, you have to join the inner circle. Basically, it costs you a cup of coffee a day. It's nothing, all right? Nothing. And we record our gains and losses net of commissions, which is $1 a contract. So one of the recommendations that I actually had earlier today, which actually I um, I was considering, was extending our self-imposed deadline of April the 29th. All right, so the objective here is to take $2,000, turn it into $10,000 in 3 months. Because I got set back here, I want to give myself more time, relieve some of the pressure. This pressure is just a self-imposed deadline, an artificial deadline. There's nothing, there's no reason not to go up. I'm going to be discussing this with Aaron and everybody back at the Eagle camp, and just see what we're going to do with this. We are going to take 2,000 and turn it into $10,000, folks. We are going to do that, and of course, this is executed in our live trading room. Now, this is actually good news for you, because if you want to get in on this, you still have lots of time. We are still slightly over our $2,000. All right. Let's go back and see how much we have here. We have $2,313. All right. That's what we have to work with, $2,313. So we're slightly ahead. So if you want to start this now, you can actually get in on this. Just make sure you are in the trading room, and then you can start. And we're gonna start. I won't say starting from zero, but we're gonna go back a few days, and we're gonna ramp it up, and we're gonna just do it methodically the way we did before, and it's gonna be fine. All right. I think I beat that to death, but we'll give you an update as to what the deadline is going to be now. All right, what we're sort of looking at. All right. All right, now I'm going to take a little bit of a new feature here. I think I'd introduce you. This is a 2-minute tutorial, and talk about something that's we get a lot of questions about, and take sort of the question maybe once a week or whatever, and see, well, what are some of the more common questions. And one of the things that a lot of people ask, hey Hugh, why do you trade further out expirations, those more expensive options, if you are looking to sell the same day? 2 words: data loss. Is my 2 minutes up yet? I think I still got about 1 minute and 45 seconds. Okay, well, let's talk about that. What does this really mean? Here we go. All right, so let's look at an option chain comparison. If tomorrow, March the 25th, the at the money option, say the 521 at the money call option, it'll cost you $1.19. All right, $1.19. The theta on that is $1.18. And I think I'm going to use a line here. I think I'm going to try this here. Drawing tool. Okay, let me just, yeah, okay, here we go. So let's take a look. $1.18 is the theta on an option costing $1.19. That is virtually 100% theta loss. In other words, if you get into this trade, right, you get into this trade, by the end of the day, all things being equal, that will go to zero. So you will see that theta loss eat away at your premium like a cancer, a fast-moving cancer, and it goes exponentially. If you buy that first thing in the morning, you'll feel the theta loss within probably a half an hour. That option could be worth $1.17, $1.16, right? So you're going to have this pressure to the downside pretty quick. And if the market is not going in your direction very, very quickly, you are going to feel the effect of your theta loss. If it's going your direction and there's a good trend, yes, you can make a lot of money. And that is the reason I like to get into zero-day options, because if I do catch that trend, I can make a lot of money very quickly. I'm not saying I'm not going to later on get back into zero-day expirations once I get a little cushion. I want to have that safety cushion there first, which is what I had built up before. So I was able to take some zero-day options, expiration options, and not feel bad about it, because if I do lose some money, I've got that cushion in there. So now with the challenge, I'm going to go back and get the cushion again, and then get a little more aggressive later. Now let's go a week out here to Thursday, which is March the 28th. Take a look. We have a theta loss of 41 cents on an option costing $2.74. 41 divided by 274 works out to about 15% theta loss. 15% theta loss. All right. 15% theta loss. In other words, if things aren't going my way, I'm only losing a little bit of a theta loss. I'm not losing the whole thing here. It's not going to pot real fast, right? So the pressure is a little bit relieved. It's okay. I might even hold it overnight if need be. I'm only losing 15% between now and the end of the day. Let's go a little further out. 12 days expiration, right? This one here is 1 day expiration. This one here is 4 days expiration. And this one here is 12 days expiration. So we're going to go out almost 2 weeks. All right, we have 22 cents theta loss. Very difficult to write with. Let me go back here, try and get this. Very difficult to draw with a mouse. But if I go 22 cents divided by the cost, which is $4.59, that works out to just under 5% theta loss. All right, and it's actually 4.8%. But let's just consider it rounded up to 5% theta loss, which is even lower than this coming week's options, right? So what does that mean? Well, if I have an option that's going to expire in 2 weeks, I have no qualms about holding it overnight, because a lot can and does happen, right, in a 2 week period with your options. So you're not losing a lot on theta. Now, I found the best balance to be on Mondays and Tuesdays to be this Friday's expiration. So these are probably the options I would probably trade right here. All right, down in here. And further out, you tend not to get necessarily the same profit, because it's a little bit slower going, and it just takes a little longer to get. So I'm trying to find the best balance between risk and reward. And I found this to be the best balance right in here in the middle. So Mondays and Tuesdays, I like to have end of the week, say this coming Thursday expiration. Now, generally speaking, Wednesdays, Thursdays, and Fridays, I like to have the following Friday's expiration. So that's kind of my thrust over there because of this. So anyway, I'm going to leave that with you. That is the sort of the 2-minute tutorial. Now you're going to say, well, the options cost so much more. So what? So if you got, say, $2,000 that you're going to have to work with, let's say $2,300, which is I think what we have, divide that by, say, 459, I can buy 5 contracts. I can buy 5 contracts 2 weeks out. Or if it's going to be this week, the 274, if I have $2,300 to work with, $2,300 divided by 274, I can buy 8 contracts. 8 contracts. If I have $2,300 to work with and my options cost $1.19, well, I can buy 19 contracts. 19 contracts. Now, I don't have to make quite as much money on 19 contracts. I could be probably okay to make my profit target maybe at 5 or 6 cents, whereas I might need 10 or 11 cents with these that are going to expire in a few days, versus maybe I might need 14 or 15 cents on options that are going to expire almost 2 weeks out. So there's always this balance that you're fighting, right? Your risk and reward and time, and you have to anticipate, do I think the market's going to go up? Is it going to go down? What are the news items? What are the fundamentals? What are the technicals? What's Aaron say? And all that sort of stuff. So anyway, that's kind of what that's all about. All right, so it is now time for some questions, and I am going to go to the famous questions box. Okay, I'm not going to discuss the particular trades in the trading room here. This is not the venue for that. So thank you all for those questions about what about Fridays. If you are in calls from Friday, they don't expire until next Thursday, I guess. So let's wait and see what happens this week on that Monday and Tuesday. All right, so let's just take a look tomorrow to see where that one's going to go. All right. I think because Aaron is on vacation, I think he is still going to be looking at checking in because he can check in remotely, and I think that's really what he wants to do. At least I talked to him yesterday about that. So he's still going to try and get online every day. So I don't know whether he's going to have his beta test group on Friday. I haven't talked to him about that, but I'm sure he'll apprise you if that's going to happen. Okay. Manny, your recommendation, why do you always put not to? Thank you for that. Okay. So in our pick of the day, we sent out a pick of the day, and I had this is one of those things I have actually in my notes, which is what I we have marketing meetings every Tuesday. And in the pick of the day, there's an example, and for some reason they put in there not the pick of the day today, but the example is of the pick of the day today. So I'm going to have them either, you know, don't use the example as the real pick, or remove that not the pick of the day today because it's confusing. So Manny, ignore that thing about the not today's pick, because in that case it is. So I'm going to get that changed, and I thank you very much for noting that. In fact, I want to make sure I have that written down. Bear with me while I get my just here it is. Yeah, there it is right there. All right, there it is right there. If you can read it, the not the today's pick. I can't get the camera on here. There it is right there, somewhere in there. Anyway, there's. All right, so there says I made note of it for our meeting on pick, not today's pick. Get that changed. Thank you very much for noticing that. You know what, you guys, I love you guys because you guys keep us honest and you keep us on track, and and I feel that it's really good. Is that there's some really good things that come out of these sessions, you know. Hmm. Just hope I keep my voice. All right. Thanks for that, Doug. He's interested in a good. I think he's got an F-18 fighter with low miles. Okay. We'll talk about that later. Has the Zoom link been sent out for the coming week? I will make sure of that. Let me write that down. If it isn't, I will make sure that it is coming out to you soon for the week. All right. I will send that. Aaron sends those out, and should be out. If it isn't already, it should be fair. It'll be before the end of the night here. Should be. All right. Thanks for reminding me on that one too here. Oh my gosh, John G. For the trading room, is it realistic that someone with a 50K account could make $300 a day? 100%. You don't even need 50K. All right. Let me give you an example here. Let me give you an example. Uh, Hold on just 1 second here. Okay. Let's say you had $5,000 you're trading with. $5,000. $5,000. Okay, just bear with me for half a second. Okay, sorry about that. If you had $5,000 that you're trading and you are looking to make so let's say an average option might cost you, let's say, $2.50. Take the 5,000 divided by the 250, you can buy 20 contracts. 20 contracts. If you're looking to make $300, divide the $300 by the 20 contracts. You come out with 15 cents. Is that right? $300 divided by 20 contracts. You need 15 cents. That's what if you have $5,000. So add another penny in for commission. Yeah, you can easily do that. 16 cents on an option. It's not hard at all to make money. If let's say you're trading $10,000, $10,000 on one trade, and if the option is $2.50, you can buy 40 contracts. If you're gonna, and this is actually a good strategy. If you take $10,000, and I do this a lot, I use a little more. I'll use say $20,000, $30,000. But if let's say take $10,000 and you only want to make say 5 cents, which is nothing, 10,000 times 0.05, you're going to make $500. Think of it this way: if you have 100 contracts, each penny is $100. Each penny is $100. If you have 10 contracts, right? If you're using 10 contracts, then you're going to need obviously more of a gain to make your $300. If you just do the math like that, if you're trading $10,000, you're looking to make $300. So take the $300 profit divided by your $10,000. No, sorry, 40 contracts. If you have $10,000, you can buy 40 contracts at $2.50. All right, with me? You want to make $300 a day? Take that $300 divided by the 40 contracts. You only need $300 divided by your 40 contracts. You need 7.5 cents plus another penny for commission. Let's say 8.5 cents, which is nothing. You should be able to make that in a few minutes. If you look at our setups, not even a few minutes, usually in about a minute or two, you should be able to make that. When you look at our setups and you get in at that right time when we tell you to get in with the setup, that 8 cents comes like that, 8, 9 cents, 10 cents. You should be able to make that $300, no problem. So let's review that. If you got $10,000 and you are buying a contract, which is an at-the-money option for $2.50, that enables you to buy 40 contracts, right? If you're looking to make $300 a day, 300 divided by 40 contracts, you only need to make 7.5 cents per contract to make your $300. Add another point in for commission, 8.5 cents. There's your $300, and that's fairly easy to do. So I hope I didn't confuse you with that, John. All right. Question: do I ever trade straddles, strangles? No, I have in the past. I never understood why somebody would want to do that. I actually had this question posed to me a few days ago. So let me get this straight. I know the one's going against you and the other's going in your favor. And then they said that, well, yeah, but you drop the one that's going against you and you ride the other one up. Well, markets don't go in straight lines. They don't go up. They don't go down. They zigzag. They zigzag up. They zigzag down. They find support. They go back up. They go back up higher. They find resistance. They come back down. They go back down lower. They're all over the place, right? So do I celebrate my gains on the one and I cry in my soup on the other at the same time? That's a real play on your emotions. At what point do you drop the one and ride the other one up? You don't know how far you're going to ride the other one up, because let's say you lose 10 cents on the one. That doesn't necessarily mean you gain 10 cents on the other. Maybe you gain 5 cents, maybe you gain 7 cents or 15 cents. And on both of them, you're losing theta loss. So I have not had great success with that. And from a technical level, I also look to see, does anybody having great success with straddles and strangles? So in those groups that I used to trade in a long time ago, nobody did well with straddles and strangles. Theoretically, it might almost sound like it's an okay thing to do, but even that I had trouble with, because, like I say, you're losing on both sides with your theta loss. So the answer, no, I don't trade those. So how can you get your ebook? Which ebook are you referring to, Perry? I know you can go to the website and get the put your name in on the right side there, and or if there's a particular ebook you're looking for, email customer service at DayTradeSPY and ask them for a particular ebook. that they will that that you're looking for if there's a particular one you're looking for. So, all right, indicators. What are your indicators? I've got I'm bringing I bring in 10 and 20 exponential moving averages. I bring in pivot points. I bring support resistance lines. I bring in support and resistance lines. I think I said that. I bring in trend lines. So I bring chart patterns. We install the yellow brick road, which is what we use as well. Aaron's got his Fibonacci, Andrew's pitchfork, some other stuff that he uses. I also bring in fundamentals, and I will look at news that's coming up. I look at all that wonderful stuff, and I bring that all together. So I can't say there's any one indicator that is going to direct where the stock is going to go, except the yellow brick road. That's very accurate. And when we bring in the yellow brick road, when we invoke the yellow brick road, we we have a pretty good idea where the market's going to go based on all the other indicators. So that's actually something that's pretty unique to the Day Trade Spy trading room. All right, so you'll want to make sure that you get in on that one. Because when the yellow brick road, when we put that up on the charts, it's uncanny how accurate that really is. So, all right, yeah, yeah. Who's it that said that? Bob. I saw my. I don't know if he's still on, but I did see that my doctor was actually on earlier. He wanted to see what we're doing, so yeah. So you know the drill on that one, right? Okay. Okay. Okay, I'm a member of the trading room. Last Sunday, I got an invitation to register for the week sessions. I have the trading room link should be going out later tonight. Okay, and okay, no, we're not going to go over the OMG trade. We're not going to get into the details. Those details of what we do in the trading room, we're going to save that for tomorrow morning. Okay, this is just a general, casual Sunday night weekend review, upcoming week. All right. Okay, here's a good comment here. It's an election year. I would not be surprised to see the first cut not happen until June at the earliest. The rate cuts. Market is closed Friday. Yes, it is. Okay. All right. Greetings, Texas. Okay. Friday was the 4th. Okay, I might have lost a day in that calculation. I'm gonna probably gonna go back and reset the dates on that and take it from where it is. I think I may have lost a day in there somewhere. I'm not really sure. Uh, and question here, why do you target 6% gain many days? If I wait 20, 30 minutes, I can get much higher gain. Okay, that's a good question. Why do we target like a 6% gain? Okay, so I don't know if you've ever been on any other uh, people's programs where they say, yeah, it was a gain. It went up 3 cents. So it's a winner because it just went up 3 cents. So we got our prop. Well, guess what? If it just went up 3 cents, we wouldn't have sold it, right? I mean, let's get real. So you have to have a standard by which to measure success or failure. So we put in 6% only because by far most people, even the novice of novice traders, should be able to get 6% using our method. Now, as you get into the trading room and you get better at what we're doing, yes, you can target much more than 6%. So we just use that as a very base minimum, right? Very base minimum as to how to measure success. I would say most people who are in our programs are doing much better than 6%. But that's how we measure success. So that if you're the most basic novice trader just starting out, this way, we're not leaving anybody behind. You should be able to do that. So, okay, Timothy, I know some people are in some calls right now. Let's not worry about. Let's see where the market's going to go tomorrow and Tuesday, as I mentioned earlier, in the upcoming week. I think markets had a general trend over the last 5 years to go up, 7 points in the coming weeks. So let's see where that's going to go. At least it's in calls. Buddy here. Okay, I gotta read. Buddy's giving me a novel here. Let's see. Let's see. Here we can aggressively catch up. Okay, yeah. So, buddy, so I may be changing my opinion on aggressive. I think I mentioned I'm trying to aggressively get that 10K challenge underway, and I probably could, but I was thinking about that, and I didn't read the whole thing here. Okay, I saw what you're saying, buddy. Right on, buddy. Buddy, that's his name, buddy. Extending the deadline. I think that's a brilliant idea because I think there's a lot of people who may not want to do this aggressively. They want to do this more carefully with safety. And for that reason, I think we're going to extend the deadline. I think we talked about that a little while ago. So, Phil L, meds are knocking me out. Hope you don't. Thanks. Yes. Do not trade when you're under medication. Not a good idea here. So, all right. Initial the trading it wasn't a challenge. Okay, this I think it was on Friday. Didn't have the challenge. That's what it was. So one day I didn't show up because I didn't. Oh, I know. Yeah, I had a doctor's appointment or something. Yeah, there's one day in there that I was. I wasn't able to get out of the trading room here. So, and I see a lot of people are chiming in. I love it. They're all chiming in because they want to extend the deadline. Definitely, we're going to do this. Um, and thank you for that, Karen. She says, I love the 2 to 10K challenge. It really motivates me and my account is growing. Nice to see that. Okay, I'm scanning these okay, I can't read them all here. Um, and here's a question here. What about on Monday or Tuesday using a Wednesday expiration? Um, Again, I'm going to try and bring in safety over the aggressive. See, there's a balance, right? Trying to get aggressive or do you want to be safe? So I'm really glad about that. Okay. Yes, I use Tasty Trade for my personal trades. I still trade sometimes on Thinkorswim because I figure if I'm going to use their charts, I should give them some commission. But I generally use Tasty because with Tasty, so the thing with Tasty is this: the commission is $1 a contract plus a couple cents for exchange fees, up to a maximum of $10. So if I'm trading 100 contracts, my commission's only $10. You can't beat that anywhere. Okay, not even anywhere. So. Question, how do you feel about using stops? This is a question that comes up a lot. I don't like to use stops on SPY options because they generally don't work. So it's the second you buy an option, you are already underwater, just with the bid-ask spread. And options need some room to breathe. Very often you'll see an option drop 10, even 20, 30%. But if you just wait a little bit, and has this ever happened to you? Right? The option goes down 20%. Oh, I gotta sell. I'm losing my share. You know, and then you still watch it like it's still yours after you've sold it and taken a loss. And then 5 minutes later, right? It goes back up, right? It swings back up, and then 10 minutes later, you say, I can't believe it. I sold it. Had I waited 10 minutes, I would have made 20%. Does that ever happen to you? So we generally come up with high probability trades. We allow the trades to breathe if they need to, right? And just sit back. We like to buy plenty of time as a rule so that the option has some room to breathe and maneuver and go down if it needs to. And and then it gives its rewards. At some point it'll come back and give its rewards. It's like a crying little baby. It has a temper tantrum, but you don't kill the kid to stop it crying. That's not, you can't do that, right? Although you would like to. But just let the kid go through its temper tantrum and let it cry itself out. It's got to release this energy, and then it'll settle down, go to sleep. And that's what options are like. It's actually pretty funny, the analogies you can use with options trading and other real life stuff here. Is there a reason we did not receive the signal today? Aaron usually sends them out. I'm gonna nail him down where he is, and after the session here, we'll get him out to you, all right? Uh, do you ever feel the market is just out to take your money? It's their goal, right? Absolutely. Norman, the market's job is to take your money. Your job is to take it back, right? And thanks for that, Melvin, and some of these other comments about the little tutorial. Still in the trade from Thursday. Should I get out on Monday? Michael, let's just wait and see what happens Monday. All right. Okay, I'm just going to quickly scan through these here. All right. Okay, please help me on Friday. I followed your advice, never reached a 6% profit. Do I hold on to the contract or do I sell it at the end of the day? Let's take a look at the at those options on tomorrow morning if you're in the trading room. Okay, so let's get into some Let's talk about the trading room, folks. The trading room. And I'll get to some more questions after, right? Folks, I keep talking about this trading room because I think most of you know what calls and puts are. If you don't, stick around the tutorial after I'll go over that. You really need to be in the trading room. Okay, this is our live trading room, and it's hosted every morning by yours truly, along with Aaron. The two of us have over 40 years combined market experience. I often tell people I sure wish I had a Hugh and Aaron when I learned how to do this. I don't want to sound like I'm boasting, and I'm going to apologize in advance if that's what comes across as, but you actually have a couple, professional traders. This is what we do. We don't do something else during the day, and this is what we do on a hobby. This is what we do. We spend our time focusing and working with and analyzing and discussing and all trading all the time, both Aaron and myself. And so you have the resources of two traders who've been around the block. There's not a whole lot the market can throw at us now that would surprise us. So this is where you want to do, and this is where strategies come alive. We're on every morning. We do not monopolize your whole day. These are not drop-in centers or coffee clubs, or I don't know if you've ever been on any other trading rooms where whoever happens to be in front of the microphone is in control of the situation. That's not at all. These are events, and we get together, we discuss the market moving events, news, whatever, in pre-market to see where do we expect the stock to go today, why, whatever. What kind of trading day is it going to be? Is it going to be range-bound trading? Is it technical trading? Is there some news that's going to drive the market? What's going to happen today? And then we discuss the entries and exits at 9:30. We look at getting into positions, and we look at making some money. And generally, we make some money, right? And then we're done by 10:30. All right. Learn and earn from the best. We've been around here. These are informative, they're interactive. So you are able to ask Aaron and myself questions. They only come to us, so you can never be embarrassed in front of a group if that's what your concern is. Aaron and I are the ones that see this. So we aim to answer the questions as best as we can. We do have a lot of people online, hundreds of people online, so we may not get to all the questions, but bear with us and we'll certainly try and answer your questions. We teach what we trade and we trade what we teach. It's as simple as that. We're not going to give you all this theory that's not going to ever apply or stuff that's just way out there that's really, impossible to comprehend or doesn't matter, whatever. We don't give you that. What we do is we show you what we do ourselves to make some serious money on the markets. Real people, all right? There's no AI stuff here. There's nothing crazy. We give you real setups, real trades. Again, any questions, get them answered in real time, right? And we've got the longest running trading room that we know of. We've been doing this since 2010. So we're in our 14th year of doing this. I don't know of any other trading room, and I've seen a lot of trading rooms come and go, come and go. But I think we're doing something right because we know what works both trading and training. All right. And I think that's really important. It's not just knowing how to trade, it's also knowing how to teach people what we're doing. And of course, you got the 2 to 10K challenge. And we have a lot of fun. It's exciting trading. So that is the reason you need to join the trading room. All right. And if you're not a subscriber, you should be. And my question to you is, can you afford not to subscribe? Now, I'm going to tell you something. This is what I want you to listen very carefully about. At Eagle, and I'm going to go back here to the, hang on a second. I'm going to see if I can do this here. Okay. I really need to talk to you about this. We have these corporate meetings all the time. Now they are talking about increasing the price or getting the regular price, I guess, of where did they go? Where did they go? Of I think it's $39.90 or something a year for the trading room. And hang on a second, this is it right here. Where did I go? Where did I go? The trading room. Where is it? How come I can't? There it is, right there. All right, look at this. This is the price they are looking at. $39.90 a year. Now, they have this is the best deal, $39.90. So if you go to the website, it's going to cost you almost $4,000 a year. But I still have the link, and I'm sure they're going to criticize me, but I know they're not watching. So, but I have the link from before for the quarterly payment. And once you get on the quarterly plan, they'll keep you on the quarterly plan, right? And the quarterly plan is $6.99 a quarter. $6.99 a quarter. So what is that? 3 months, and I don't know, 4.3. We're talking here about something like $10 or something a day or something for the trading room. So if you take that deal now, after this session, you're going to get that URL pop up on your screen. And I think, and if you don't get that, you may even want to contact customer support at DayTradeSPY and tell them that well, yeah, go ahead and tell them. I'm sure they'll probably say something, but that's okay. That you want that $6.99 a quarter deal. And what they'll do is they'll just keep that going. So once you get in on that, right, then they'll just renew it in 3 months. So I think that's a lot better than $4,000 a year. I mean, I don't know, maybe not that much better, but I think it's a better deal. So you want to get in on that. Now, if you don't like it, I think you've got what, 30 days or something. You actually get your money back if you really don't like it, if it's not for you. So you can't lose. You can't lose. So you should jump on that. I don't want to use the word guarantee. There's no guarantees on anything, but I'm pretty sure you're going to learn something if you're in the trading room for a month, even if you don't like it, right? So get in on that, folks, all right? And that is what you want. $6.99 a quarter. Can you afford not to subscribe? Because I don't think anybody can afford that. I think everybody has to. I think everybody should be in on that one. Anyway, I don't like that red. I like to play with this PowerPoint, don't I? I guess I'm gonna make this white. There you go. Can you afford not to subscribe? Anyway. All right, so that's what that's all about. And right now, what I'm going to do is I believe that subscription page is going to come back online after we finish the webinar. I'm quickly scanning this down for any other quick questions here that we might have. And I don't want to keep you all night because it is already 9:19. Jeff's asking a while back, we're talking about starting the trading room about 5 minutes earlier. You still thinking about doing that? We're still mulling that about. But so here's the thing with that. Okay, so instead of 9:20, maybe starting at 9:15. Believe it or not, in the whole day, that is the most important, the busiest time of the day for us, right in there between 9 and 9:20. And we've kicked that around. Well, if we start at 9:15, that actually makes a big difference to what we do because there's a lot of stuff going on right in there. We have to analyze a lot of stuff, and there's a lot of stock market stuff that we're receiving, news items and different things. So that's not always feasible, but we'll probably see what happens once Aaron comes back on vacation. Maybe I'll kick that around with him a little bit. So, okay. Okay, I'm just kind of quickly going through some of these things. Okay, there's a lot of, oh yeah, okay. Thanks for that, Eric. Thank you so much for that. Okay, I'm just going through some of these comments here. All right, so what I'm going to do is I'm going to kind of wrap this up here. And I know there's a lot of questions and things I can't really answer because yeah, here. Okay, so we're kind of running out of time, but I'm going to be we're going to be doing this all over again here, rather getting into the trading room tomorrow. We're going to get into a lot of the questions here tomorrow on some of these things that are coming up. But anyway, with that, I think I'm going to wrap this up. So, folks, stick around here in about a minute or so. We're going to do the options primer. For those of you who are new to options, I'll tell you what options on SPY are all about and why you need us and why we trade SPY options. Thank you all for joining us. It's been a pleasure. Hope to see you all in the trading room.
Tell you what I'm seeing, you can have
right, we are back for the options primer. Okay, all right. If you are new to options, folks, what do? We day trade SPY options. That's it. That's all we do, period. SPY, SPY, all SPY all the time. All right. It's the highest traded stock. It's affordable. It's diverse. People often ask me, well, why don't you diversify? Well, there's nothing more diverse than SPY. All the sectors are represented there. It's also very liquid. Pretty well anything that you throw at SPY, it can handle. If you have $1 million in options you want to trade, SPY can handle it. Profit potential is absolutely phenomenal. It's also fun and exciting trading. What are options? What are options anyway? They're actually contracts. It gives the options holder the right, but not the obligation to trade the underlying stock for a certain price by a certain date. Don't get too bogged down in that. All you have to do is just know a couple of the names. If you expect the stock, the underlying stock to rise, you buy a call option. If you expect it to drop, if you expect SPY stock to drop, you buy a put option. Call up, put down. All right, we buy first, then we sell. Options have strike prices. This is the set price at which the option can be bought or sold when the stock can be bought or sold when the option is exercised. And with that, you get in the money and out of the money. We'll get into that a little bit. First, expiration dates. All options expire. This is the date, the final date at close, market close, when this thing just evaporates. If you are 1 cent out of the money, your value goes to zero real fast. All right. You will have no intrinsic value. If you are in the money, you have some intrinsic value. This is when the market price of the underlying security is above the strike price for calls, below the strike price of its puts at expiration. Allows the options holder to exercise it profitably. Obviously, the opposite is true for out of the money options. If you are out of the money, you have no value left. It is worthless at expiration. So for that reason, that is the reason we do not want to hold on to options. These are not buy and hold strategies. If you want to buy something, hold on to it, buy the stock. Buy the stock. Options are not buy and hold strategies. Okay. Never were, never will be. Pros and cons. Pros, a lot of flexibility with options. Cost efficient. Leverage is absolutely huge. You don't need much of a move on SPY, the stock, to make some pretty serious money on the option. The return potential, of course, is quite large with these things, and there's a lot of strategies you can have as well. I like it because there's a lot of fun and exciting trading. I actually get pumped, really excited every morning when I open the market and say, okay, let's go. Let's have some fun. There's something very rewarding about beating the market. Okay. Now there are some cons. I mentioned this theta loss. That's that time decay, right? You also have commissions you got to pay, and let's face it, they are risky. There's some element of risk. So options, our sort of motto here is one stock, one strategy, 1 hour a day. And over the years, we figured out what works and what doesn't work in both trading and training. Why SPY? SPY follows the top 500 US stocks. If you're new to options, new to stocks, you'll probably be lured or tempted at least by penny stocks. Stay away from penny stocks. They have only one goal in mind, that is to take your money. I'm sure many of you got into penny stocks and wondered, what am I doing here? Maybe a couple of you have made money, but if you play it long enough, you might as well go to a casino. You're going to lose your money on penny stocks. Do Google pump and dump, right? I'll even tell you a little bit about it. I can find a penny stock fairly worthless. I can start accumulating it little by little, little by little. I can accumulate, I don't know, 100,000 shares, hundreds of thousands, whatever I want, right? And then on one of my sessions like this one here, I can say, hey, you know what? I heard about this one penny stock. I know it's penny stock, but I think this thing's actually going to go somewhere. And here's what I recommend. I think you can get it for maybe 10 cents. I'd be loading up on this one here, and I get a feeling in the next little while, this thing's probably going to go up. And here's why. You can spin some stupid story around it. Doesn't even have to be true. Guess what everybody's going to do? You're all going to run out tomorrow morning and buy this crazy penny stock I would recommend, right? By doing that alone, by me pumping it up that way, you and creating the demand, you run out, You create the demand. What are you going to do? You're going to push the price up, right? That price of that penny stock that I told you about, what you can get for a dime, could go right up to 10, go up to 10 times. It could go to $1, $2 in no time. Well, guess who's going to be dumping it? Me. Those 100,000 shares that I picked up for 10 cents, now I'm dumping it for for $1, and I just made $1 million or something. Seriously? And then you're going to say, look, Hugh was right. It did go up. And you're going to try and selling it, but by this time I have sold all mine and the price is just coming right back down again. Some of you may do well, some won't. Look at it. I would never do that. It's just flat out wrong, not to mention illegal. But that's what pump and dump is. That's what penny stocks. So by staying with the top 500 stocks, you are buying the quality, the cream of the crop, the best. All right. That's really important. It's also an efficient use of analysis time here, SPY. You don't have to be in front of the computer for hours and hours and hours trying to figure out different stocks and sectors and all these other crazy things. I generally get in front of my computer somewhere between 8 and 8:30 in the morning, and I've got a pretty good idea as to where the market's going to go today. Moves are quick. Earn your daily gains faster. A lot of times we're out of our trades in a few minutes. Done for the day by 9:35. That happens more than you realize. SPY is fairly reliable, consistent, predictive, and even forgiving. All right. And prices can be anticipated in any market, up or down. You can actually trade SPY if you think the stock's going to go down. You can just buy it to the downside, buy puts. Why SPY now? Learn something new. Stay mentally sharp. Earn while you learn. Time passes anyway. Might as well make money. Huge profit potential for serious traders. Live that dream lifestyle. Exciting, thrilling to beat the market. And what I like about this, you can actually pass this information on to your kids. And there's something to be said for that financial security for your kids. I find it very liberating that I don't have to worry about them now. They know how to trade. Hey, guys, you know what to do, all right? All right, let's do stock option comparison because I know a lot of people don't know. Well, let me see. Let's say I want to buy 100 shares of SPY. Let's say it costs me $500 a share. That's $50,000 I'm putting into this trade. That's a lot of money. Now, if I buy one contract, say for $3, right? Then that, let's say at $3 one contract will cost me $300. I can actually control 100 underlying shares for $300. Now let's say the stock rises $1. Well, guess what? My stock now is worth $50,100. Wow, what am I going to do with that? Now, if the stock rises $1, my option, having a 50 delta, which is the relationship between the underlying stock and the option, and at the money option, this thing for $3 will probably be about a 50. That means my option will be valued at $350. Now, look at the return on investment here. 0.2% for the stock, 17% for the option. Seriously? Once I discovered this, folks, I never traded stocks again. I never traded a single stock after this. I thought, wait a second. Why isn't the whole world trading options? That's what I want to know. That's where the money is. It's in options, right? So that, I think, is really important. Folks, one stock, one strategy, 1 hour a day. Learn from our mistakes, as you're not going to live long enough to make them all yourself. And I think with that, we're going to call it a day. And thank you all for joining us. Hope to see you. And don't forget to check out the browser. I think you'll see the link to the trading room if you can. And we'll see you hopefully in the trading room tomorrow morning. You can have